doing business in Africa. You can't afford to be without Africa Investor.
Let me move quickly to Mr. Hendrik Malan. He's the CEO of Frost & Sullivan in Africa, and he's going to be launching and showcasing a project pipeline tracker that is profiling hundreds of investment-ready opportunities for finance.
Brilliant, thank you. Good morning, everyone. All right, we're gonna switch gears a bit. I do understand the irony of bringing a little booklet along across Africa and then dishing it out at a environmental conference. But if you haven't received one of these, there are a few copies of it sort of down here. A few interesting stats around infrastructure investment, pipeline of opportunities. I'm going to use it to guide you through some of the stats that we've extracted from our infrastructure investment tracker. So I head up Africa for an organization called Frost & Sullivan. Frost & Sullivan is a strategy consulting and a market intelligence firm. So we essentially identify opportunities for our clients, and then we build innovative strategies in the region to take advantage of those opportunities. Now, as part of that process, we analyze infrastructure projects on behalf of our clients, especially our financial service institution clients. So we profile individual projects bottom up across the region, and we profile them across the stages of development. And that gives us obviously a very good and a granular understanding, not just of the magnitude of opportunity in Africa, but also of the direction of the opportunity and how these opportunities evolve and develop over time. Africa has obviously laid out its developmental aspirations, Africa 2063, the Sustainable Development Goals, quite clearly. But I think, as per all the previous speakers, the challenge that we've got is all of those developmental aspirations and objectives require a very significant amount of capital that needs to be invested. And the pace that we've seen over the past few years have been way too slow in order to be able to meet those objectives within the time frame that we've allocated to it. And also, very importantly, the infrastructure investment needs to be across what we would term the 5 fundamental industries, the foundational industries, in order to be able to effect the socioeconomic development that would be required in order to get Africa to move forward. Energy is very important. I don't take away from that priority, but there are also other sectors like information and communication technology, water, healthcare. We're talking about mobility or logistics. Are the other 4 industries that are really important in order to get a country moving forward from a socioeconomic perspective. We can't just have lopsided investment on one particular industry or 2 particular industries and then think that the country or the region overall is going to move forward from a developmental perspective. Now, when we speak to big capital, whether it be locally or regionally or internationally, they raise the typical 2 issues that we've heard previous speakers raise as well. It's pipeline of projects, not enough investable opportunities. Africa does not have the depth of projects to be able to absorb the right level of capital, or alternatively, the other group of challenges is really around the governance structures. Africa does not have the robustness of the governance structure in order to be able to absorb programmatic level capital. Now, if we can solve these 2 issues, we'll see a better flow of capital, and we'll also see a better pace of capital coming into the region. Now, I'm not going to try to address the second. I think my esteemed colleagues have started addressing that, and I think we are going to address it from a digital perspective as well, for sort of some of the speakers following me. But I am going to address the pipeline of opportunity. I'm going to address the magnitude of opportunity that's already in play off the back of some of the research that we've done. And we've also decided to launch a report as part of this process with the partners that you'll see on the screen. As part of this week, you'll see a press release going out later this week that will detail some of the opportunities that are in the infrastructure pipeline, in the infrastructure tracker that we've been maintaining over the last few years. Now, as I mentioned to you, we analyze projects over 4 different phases. Announced projects or tentative projects. So these are projects that have been announced that are currently going through various stages of feasibility. So every single infrastructure project goes through multiple stages of feasibility analysis, and those would typically fall into our announced or tentative stage. We also analyze them obviously across committed. Committed in our definition would be projects that have finalized all their phases and stages of feasibility, and we would term them as shovel ready. So they are ready for financing, they are ready to essentially sort of start executing on these projects, and they fall within the committed range. Ongoing projects are projects that are currently on the go, currently being executed on, and then we also track cancelled projects. Projects that have been shelved for whatever reason, which is important because it also gives you an indication of the level of opportunity and also the direction of opportunity within the region. Now, if we take a look at the numbers, currently we're looking at about 123 projects that are active, that are ongoing in the region, to the value of about $44 billion US. They're currently across Africa. That includes North Africa and Sub-Saharan Africa that we track. And these aren't the smaller projects, these aren't the rats and the mice, these are relatively large projects, an average of about $350 million US a pop, if you can do the quick math in your head. Committed projects, a further 237 projects to the value of about $57 billion US on the go. So, count those two together. Ongoing committed projects that are shovel ready, just over $100 billion US that are on the go. Of projects 200 or 350 or 60 odd projects that are currently either looking for funding or refunding. That are in the region at the moment. We do have an additional 257 billion projects that are in the pipeline that are announced, that are going through feasibility at the moment, also speaking to the pipeline of projects that will most likely come to fruition over the next 2 to 3 years. 18 billion of cancelled projects. These projects typically make up the large projects. There are quite a lot of these mega projects in the region that typically get ensnared in bureaucracy and a number of other different things that tend to be shelved after quite a number of years. I think there are about just a handful of projects in the cancelled projects, but it is important to keep track of those as well. So at the moment, even despite the fact that we are still obviously driving, and we're in the initial stages of driving a lot of infrastructure investment, already a very strong and a very exciting pipeline of projects already in place. If we take a look at the industries, we take a look at unpacking the industry focus of these projects, very heavy slant towards construction, general construction and energy. Those two combined make up at about 84% of overall projects, which is very heavily slanted towards those two particular categories. We obviously need a much more balanced portfolio, as we said initially, across other industries, to be able to move forward from a socioeconomic perspective. Everything requires water. Everything from manufacturing to urbanization, even energy generation requires water infrastructure, and there's very little water infrastructure development going across the region. Connectivity, the solution to a lot of Africa's fundamental problems around education, around e-wealth, e-health, resides within our connectivity infrastructure that needs to be developed and connecting, especially our more rural areas. Lots of attention at the moment in the energy space, obviously. We had Africa Energy Week 3 weeks ago down in Cape Town. Very interesting conversations, dynamic conversations around not just some of the... am I competing with somebody else? Yes? No? Yes? So we've had some very dynamic conversations down in Cape Town 3 weeks ago, upstream assets, but also renewables, in the energy space. Sort of 3 weeks ago, Africa cannot industrialize off renewables only. There needs to be a parallel development between transition fuel on the one side and between renewables, which moves us into the next section, taking a look at some of the energy and sustainability opportunities. The first report that we are going to release will have the full understanding of all the infrastructure projects across the region, but we will have a particular focus unpacking energy and sustainability in a bit more detail for you as well. So hopefully that will you find the fancy bit, and then also we will release another report in 3 months' time, and then in 3 months' time after that, looking at other industries like mobility, logistics in particular, and then also industries like information and communication technology and healthcare. Right, so renewables, solar PV, transition fuel, bio, we also have a massive amount of opportunity that will open up on transmission and distribution side. So we always talk about generation, we always talk about different fuels and different feedstock that will feed into the energy side, but we never talk about transmission opportunities. An equal amount of investment typically goes into transmission. If you invest 300 million into generation, you typically have an equal amount of opportunity that opens up on the transmission and distribution side. Which means that our policy frameworks need to allow for that. Our vertical unbundling of our energy sectors typically don't keep pace of that. It doesn't necessarily allow for that, and hence our energy industries, if you take a look at across the region, don't necessarily have a lot of unbundling, vertical unbundling, and our private sector participation in transmission is virtually null and void across Africa. So a lot of opportunity to be unlocked within the energy space, not just in renewables, not just in generation, but also in other parts of the sector. Quickly taking a look at other parts of the value chain, electric vehicles, really big opportunity within the battery space for Africa. Everybody talks about Africa wanting to manufacture batteries. I think it's a really bad idea, to be very honest. I think we need to focus on very specific parts of the value chain that we can evolve and develop. At the moment, we take raw extracts from Africa, we ship it off to China, it gets beneficiated, manufactured, and then ship around the south coast of Africa back into Europe. What we should be focusing on are particular points within the value chain that we know that we can beneficiate better. If we move from mining to refining to precursor production, think manganese, nickel, cobalt, graphite, platinum, 2 steps forward, we can increase the value that we generate in Africa by 29 times based on what we're doing now. 29 times increased value generation compared to what we are doing now, which is increasing the value from the extractive industries right through to precursor production. That's not cells, that's not battery, that's not electric vehicles. All of that can be done somewhere else in the world. That's just moving 2 steps forward in the value chain in batch manufacturing. Another interesting stat for you, green hydrogen. You will be hearing a lot about it during the conference this week. It is the most promising energy storage technology that we have at the moment. If you talk to anybody in the energy space, Africa has the renewable energy potential to produce 5,000 megatons of green hydrogen. That's equal to the world's energy supply at this particular point in time. The world's energy supply, 5,000 megatons. Can you imagine what the monetary value of that would be if we would even take advantage of a fraction of that within Africa? The opportunity that we have to take advantage of these opportunities are immense. But we need to put the policy frameworks in place, we need to put the relevant investment in place in order to take advantage of those opportunities. Lastly, and I'm finishing off, I know I'm slightly over my 8 minutes, startup ecosystems. If you've kept track of the startup ecosystems over the last 3 years, you'll see that the venture capital and the angel investment growth rates have been absolutely phenomenal over the last 3 years. Take a look at 2019, it took us about 46 weeks to get to $1 billion worth of investment in startups and through venture cap and angel investors. That industry has not existed in Africa up until this point. In 2022, it took us 7 weeks. We set records in 2021 with regards to startup investments. We are breaking all of those records in 2022, and there's no stopping. The trend is still hockey sticking beyond belief. The reason why that is important are essentially the following. We are innovating in Africa for the first time in history. We are solving Africa's problems in Africa for Africa. We are leveraging the infrastructure in Africa in order to solve Africa's issues. It will drive more investments and more refined infrastructure as we start moving forward. If we can combine that with a proper level of investment in baseline infrastructure across the 5 pillar industries, it will lead to what we term as the beginning of the Africa Renaissance. With that, I'm done.
Doing business in Africa, you can't afford to be without Africa Investor.